You are listening to chartingwealth.com for Tuesday, the 23rd of February, 2016. The market has three green open boxes going up, strong up moves in IYY, which represents the total market. A crossover going up on the 16th of February has continued on through the 22nd. We have green up boxes on our derivative oscillator, and our MACD is in a strong divergence. It means it's moving away from the red signal line. So when we look at our intraday chart, we go from the 2-day to the 4-hour. What do we see? Well, we saw where on the 18th the market slid sideways until the afternoon of the 19th. That ended the week, and then what happened on Monday morning? It shot up and then climbed a little bit higher Monday afternoon. Actually, the total market was up 1.41%. What are we waiting to see happen? Well, we're above the 2-day trend line. We have a good 3-candle 2-day trend line representing 6 days, because each of the candles we talked about on our earlier chart was a 2-day candle. And we had the market roll over, but it did not cross over on the MACD going down when it slid sideways and went down a little bit, particularly in the morning of the 19th on Friday. It then turned around in the afternoon, perked up a little bit, and then took off on Monday. So we don't have a crossover, don't have the kind of rollback we were looking for so we could find a good entry point. So we're just still waiting. Now remember, professional traders, those guys that work on Wall Street, have to trade. We do not. So what do? We wait until the conditions are good so that we can jump in and make successful trades and minimize our risk. We'd rather stay in cash until and unless we actually find something that makes sense to buy. Now, again, our entire company is about teaching and training. It is not a stock calling service. We are not paid to do that. You're not being charged anything for the education experience that we offer on our podcasts and daily and weekly reviews. All we're doing is asking you to pay attention, learn to read the charts, and do virtual trades. That is, you go to any of the online brokerage firms, you set up a virtual account, and then you start learning how to read a chart. And you practice. After you practice enough and you get good, because how do you get good? That's by practicing, and perfect practice makes perfect. Once you get good at it, then you can go off on your own and make your own decisions. We are not making those decisions for you. Now let's go to SPY. That's the Standard & Poor's 500, 500 big stocks with a lot of the volume in the market. It crossed over going up on the 16th, and we don't need to go our 2-day candles yet. That's when it crossed over. It actually crossed over on the 16th on the 2-day chart. We've connected 3 big 2-day candles going up, and we have a nice solid 2-day trend line. Derivative oscillators positive, and the MACD is diverging. That is moving away from the red signal line. If we go to our 4-hour chart, what do we see? We see a very similar to what we saw in the total market. We saw the market start dropping and sliding sideways on the 18th and the 19th, and then took off on the morning of Monday the 22nd, going up 1.45% for the day. Nothing to trade at this point. We're waiting for a good rollback on the 4-hour chart, a crossover going down, and then having it cross back over going up like we saw back on the 16th before we get in and follow the trend of the big 2-day chart. Now, lastly, as far as indexes go, we're going to go to the Qs. What is the Qs? That's the NASDAQ 100. What do we have on the Qs? We also have a good 2-day trend line, actually connecting 4 candles, 8 days worth of movement. It crossed over on the 18th going up there on last Thursday, and that is on the MACD, and the derivative oscillator crossed over about the same time going up. If we look what happened intraday on the 4-hour chart, we see that the market rolled over on the 19th And then in the afternoon of the 19th, it started moving up. And when I say rolled over, it never crossed over going down. Derivative oscillator lost some speed, and the MACD came a little bit closer to the signal line and then moved farther away throughout the course of Monday as the NASDAQ 100, represented by QQQ, as it moved up 1.61% for the day. So we again have confirmed up moves on the big charts and the small charts for all three of our indexes, the total market, the S&P 500, and the NASDAQ 100. Now, let's see what's happening in gold, which was down 1.8% for the day. We have a two-day trend line that has been broken by gold on this last candle, and it has not yet rolled over going down on the two-day chart. Gold has been technically crossed over going up since the 16th of December and has moved up substantially, really topped out on the 12th of February. That was a Friday ago, and what happened is it slid sideways over the next several days and has really not even gotten close to where it peaked out. Now, if we drop back to our 4-hour chart, what do we see? Well, our 4-hour chart, again, is back to working. It has been since sometime in January. And what does that mean? Well, it crossed over going down on the 16th and then really sort of slid sideways and up a little, but the derivative oscillator continued to go down, as did the MACD. And we've seen gold move down and below the two-day trend line at this point in a confirmed down move on the short chart, which appears to be working again. Again, that is a divergence between the short chart and the big chart. The big chart has not yet crossed over going down, that is the two-day, but it's broken its two-day trend line, so we don't have a good trend line at this point, and it is a confirmed down move on the short chart. But I tell you, as we've watched the big climb from around $100.50 up to, well, the high of the highs, $120.84. That is an incredible climb that gold has gone through. So we could expect some digestion of those things, and we'll continue to watch, but it looks like our 4-hour chart is working again, and again, confirmed down move has breached the two-day trend line at this point. That is where we close the markets on Monday the 22nd as we get ready to go into Tuesday the 23rd. Hope you've already had a chance to listen to our weekly review and forecast. It was published over the weekend. If not, it's about time to listen to it before it's too late. Thank you so much for listening. If you don't have our How to Read a Stock Chart video and our layout from freestockcharts.com, what are you waiting for? Sign up at chartingwealth.com to get our daily report, which is this podcast, both in video and or audio. You can also go to iTunes and sign up, and you will receive both How to Read a Stock Chart video and our layout from freestockcharts.com, so you can get on your way to learning how to read a stock chart. Because again, it's about the charts, not the media noise. That's what we want to teach you how to do. If you have questions, concerns, let us hear from you. Again, the website is chartingwealth.com. You can find us on Facebook, Twitter, Instagram, YouTube, you name it, we are there. Thanks so much from chartingwealth.com.